Imagine this: you're grabbing your morning latte in Melbourne, check your phone, and Bitcoin's taken a proper tumble overnight. Yeah, it's one of those days where the charts look more like the Yarra River in flood than a steady climb. G'day everyone, Sash from CRYPTOLOGIC here in Melbourne, and today we're diving straight into why Bitcoin's shedding value fast, what Australia's regulators are doing about the dodgy side of crypto, and what it all means for us down under. This segment is brought to you by cryptologic.com.au, your go-to hub for in-depth Aussie and crypto or global crypto news. Right now, Bitcoin is trading at around 118,500 AUD. Oh boy, 83,000 USD, down sharply over the last 24 hours and pushing into fresh lows for 2026. That's a solid 5 to 7% drop depending on the exchange, and it's part of a bigger risk off move across markets. Let's start local because this hits close to home. Australia's regulators aren't sitting idle. ASIC's been zeroing in on those regulatory grey zones, and we just saw a big one. The federal court slapped BPS Financial, the mob behind the coin token, with a $14 million fine for misleading consumers and running unlicensed ops. This is a reminder that while crypto is growing here, the watchdogs are getting stricter to protect everyday Aussies from scams and shonky projects. Speaking of scams, there's a fresh reporting on global networks hitting Australians hard. Tens of thousands affected, millions lost through fake investment schemes, often pushed via crypto. It's brutal. And it underscores why we always say, do your own research, stick to reputable platforms, and never chase promises of easy riches. Now, the sun's coming out. I like it. Now, globally, the big story is Bitcoin's pullback. It's slumped amid speculation that the next Fed chair could tighten liquidity. No quick rate cuts on the horizon, and investors rotating into pet rocks like gold instead of digital gold. We've seen BTC dip below key levels, with some reports hitting as low as 81,000 USD temporarily. US spot BTC ETFs even saw outlaws, while the broader market's caps taken a hit. This feels like a necessary consolidation after the wild runs, a reset before the next leg up. But it's testing a lot of diamond hands right now. And here's a little light relief in the middle of the red. Why did the Bitcoin go to therapy in Melbourne? Because it had too many blocked emotions from all the recent crashes and couldn't handle another halving heartbreak. All right, let's get into the CryptoLogic takeaway. Look, this dip isn't the end of the world. Crypto is volatile by nature, but the fundamentals haven't changed. Limited supply, growing institutional interest, and real-world utility building. For Aussies, the regulatory crackdowns are actually a good thing long term. They weed out the bad actors and build trust. which could drive more mainstream adoption here. But short term, protect your capital, don't FOMO or panic sell, and consider dollar costing averaging if you're in it for the long haul. Important disclaimer: I'm not a financial advisor. This is just my take based on the latest data. Always do your own research and consider your personal situation. If you're finding value in these updates that I'm doing, smash that like button, subscribe if you haven't, and drop in the comments. Are you buying this dip, holding, or waiting it out? And check out cryptologic.com.au for the full breakdowns and Aussie focused insights. Until next time, stay sharp out there, hodl responsibly, and I'll catch you in the blockchain. Cheers from Melbourne.